Mr. Terence, how are you? Long time, long time, long time, long time. What's happened? Your mic is closed. I can't hear you properly.
Always later, always later, always later, always later.
Ah, wonderful. Wonderful, 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 wonderful. How is the market?
Ah, what is fine? Anyway,
Okay. I'm okay. I'm okay. I'm okay. I'm okay. Which instrument do you want us to look at?
let's take it fine. But this is not there's nothing much to do because we are in trade.
There's nothing much to say, ne?
Well. Yeah, so you can look at let's look at
We can look at what?
actually
Crash 300. It's Crash 300 that you guys like. Okay, I know it's fine. This one is just good. I like the volatility.
it's quite volatile and it's nice.
That's nice. Oh,
Some of the buys they are very paying. Some of those buys for first time they are very paying.
yeah. All right, all right, all right. I know it's fine. Let's look at it. Let's look at it. Let's look at it. If you remember last time, I don't know if you were present. I spoke about Crash 300 and I spoke some few important things concerning Crash 300. I spoke the fact that you know that Crash 300, in as much as it's the most volatile right now, most volatile crash and boom right now, do you also know that what these guys do once they have an instrument that is the most volatile, they also manipulate it more than any other instrument because they know the majority of the people, they are trading that instrument. So I spoke about that concerning Crash 300, that Crash 300, in as much as it's very volatile, it's very good, very wonderful, but they are aware. They are aware of that, and they are now also aware that many people you are trading it due to the nature of its high volatility. So I always emphasized and said, Crash 300, make sure that before you even place any trade, do your analysis thoroughly because they manipulate it so much. The manipulation on Crash 300 is serious. Someone who understands what I'm saying can actually tell you that the way they manipulate Crash 300 is serious. Way serious. So let's just look at the things. We don't care whether they manipulate or they don't manipulate. We just trade, you know. We just apply
I
our
don't know what
skill and trade. Right, right. Crash 300. So Crash 300, I think I've mentioned this several times. Whenever you have a trend line like this, a major trend line like this, above this trend line, it simply means the buyers are more dominant, right? Below, this is the selling zone. Below here, this is my selling zone because I'm expecting price to drop. I think I've spoken about this. Remember what happened to VIX? The VIX dropped the same way that crash 300 is VIX. I still remember, did this break. After this break, came back to retest the zone. After retesting the zone, came down. After coming down, it continued playing around in something like a range up until it broke to the downside, continued going down. Right now, it's somewhere around these areas. Do you remember? So the good part about journaling your trades, about going through your trades over and over again, is always the fact that things that whenever they repeat themselves like this on the market, you're at a far much a big advantage than someone who has never exposed themselves to such an environment. So someone who has been there before can actually predict what is going to happen in crash 300 for the next 3 months. I can actually make a prediction without even analyzing here, but simply having the same picture of what happened to an instrument that formed the same pattern. Just having that same picture come back again, I can actually predict the most probable thing that can happen to crash 300 in the next coming weeks, days, months, whatever. So here we are. According to me, just looking at this from the daily perspective, we broke out of a major uptrend, right? Major uptrend channel broken. Right now we are in a downward channel. Why am I saying we're in a downward channel? You can see that we are forming our lower highs there. We are forming our lower high here. This is the next. So these are swing highs. Swing high, swing lower high, swing lower high, swing lower high here. Looking at this, swing lower high, then boom, something like this. So we can see that we're forming our swing lower highs, which is a good indication that we are most probably. So if you check this scenario, we spoke about a scenario where you are having lower highs and the same lows. This is the same low here, same low here, same low there. When you're having lower highs and same lows, what that scenario, that situation, we call it a descending triangle. Remember? And descending triangles, what they do, the best earlier entry to enter a descending triangle is always at the top of it there. When you catch it from the top there, you are an earlier enter. You actually catch an earlier entry than the majority of the people. The next entry is on the break of this support. Break of this support. Then maybe the retest as well. Something like this. So I'm looking forward to something like this on crash 300. Let's see. So this is just from a daily perspective. This thing, let me move it. So back to crash 300. So this is on a daily, and just looking at things from a daily perspective, we are always going to go down to lower time frames and see what they're saying. But from a daily perspective, I actually can see the overall picture that is happening. So having seen that on the daily, I can go to a 4-hour perspective and see what the 4-hour is also saying. What the 4-hour is also saying. So when it comes to trading, let me tell you one most important fact. Flexibility is very important. What do I mean? Not only trading, in a lot of things, you have to be flexible. Flexible with what? Flexible to accept that you analyzed wrong, your bias was wrong. That's someone who is flexible, and you're able to quickly change your decision because you've analyzed and said that, I was wrong, my analysis was wrong, my prediction was wrong. You quickly change. So 4 hour, you should check with this sharp downward channel there. So it was broken, retested, and retested like that. What can we look at? Let's draw our zones. Let's see. Let's draw our areas of significance. I have this neckline here. It's an area of significance to me. This zone here, area of significance. This zone here, area of significance. So areas of significance, they are not everywhere, these areas. I've seen people drawing thousands of these areas on the chart. Then I wonder, these guys, what are they really doing? These areas, you are just looking at the major areas where price either turned or made a major move. So here, as it was turning, it broke this major area. Neckline, what you know about necklines, they always have to be retested. Here it failed to retest, but now it went back above. So it can still respect and retest, then go. Looking at this area as well, this was a break and retest, break retested, significant area as well. Here, respected, broken. Most probably this move that will go up, it will simply be a retest. This thing, can you see? So this move that might go up, to someone who is looking at with clear eyes on the market, they can actually tell you that this move here is coming back to retest this broken support. Every support that is broken, major supports, when they're broken, they have to be retested somewhere in the future. Broken, it was never retested. Can you see? Broken, never came back here. So now this move is the retest, according to someone. The retest, then boom, we continue going down. That is why the sales are most probably going to continue here. If this market comes there, it's still a lower high. It's still a lower high because I'm looking at swing levels now. I'm not looking at smaller time frames. If you look at things, if you look at market structure using a smaller time frame bias, you are going to always be miscalculated because the smaller time frames, they change every time and they change quickly. For example, someone who is using 1 minute, 5 minute, 15 minute, whatever, they can actually tell you that this thing is uptrending, which is correct according to that, because already you can see on smaller time frames, this market is already forming high highs and high lows, which is correct. But looking at the highest high time frames, daily, weekly, whatever, if you go there, you realize that this market is simply forming lower highs, lower high there, then the next low I'm expecting it somewhere there. So meaning the buys, cash 300 presenting buying opportunities. Right now, I can actually see that most probably we can actually have beautiful buying opportunities as of today, tomorrow, up until the market gets to the zone, somewhere around those areas there.
Also saw this one.
Wonderful. Wonderful. That's a good thing. That's a good thing. So you realize that every level in trading, Mr. Terence, it has its own devil. Every level has its own challenges. Once you break through the level of not knowing how to analyze. Once you break through that level, then you now know how to analyze. You face other challenges there. Challenges like one, the issue of risk management, the issue of lot sizing. That's also another challenge. Once you break through that, you go to higher challenges, bigger challenges than that one, whereby sometimes your emotions, they play around with you, they confuse you. They can even make you to doubt or question your analysis. That's another level. Then there's also another level where you are stable now, everything is stable, your emotions are stable, everything is stable, but you still have a problem of wanting to be inside every time. In as much as you now know how to analyze, you now know how to manage your emotions, you now know how to manage risk, but you still want to be inside the market. Whether it's going down, you want to be down with it. Whether it's going up, you want to be going up with it. So that is also another challenge now, because the market, you don't need to be always inside. I'm not saying don't take advantage of the opportunities. No, but I'm simply saying that can actually be a challenge if ever it's not managed properly. If ever it's not managed properly, because trading is a very flexible industry. If I tell you, it's a very, very flexible industry. You don't, it's not a thing that, it's not a must to say you must be on the chart every day. If ever you, today or tomorrow, you make something that is times 2, times 3, times 4, times 5, or times 10, your average daily target, it means the following day, you might not be that much active in as much as you can take trades, but you will just be taking it easy and uh, not being too much aggressive or too much. You understand my point? Yeah, so there are days like that. Once you make good money that is beyond your normal target, you simply need to take it easy a bit, take it easy on yourself, take it easy. So yeah, I think, right, according to the manipulative way that I know, crash 300, this thing can still, it can decide to crash here, crash and come back here, then go. That is if this candle fails to close above that zone, crash 300 can still crash all the way down before going up. That one is very possible. That one is very, very possible. There's 1 hour 50 minutes for this candle to close. So even if it comes down here, we'll simply take our buys from down there. But if it doesn't, we'll simply have to take it from there. First target, second target. So these targets, I'm marking them based on a high time frame, 4 hours. I'm not using the 15 minutes, because if you go to 15 minutes, you realize that there are so many zones in between here. Those zones, you can simply use them to shift stop losses. The zones that you find on smaller time frames, you can use them to shift your stop losses, maybe, but not mainly for targets. Me, when I look at targets, I look at these high time frame zones, because the probability of the market coming back to the zone, it will be higher. It will be higher. So that is what we are looking at on crash 300. Crash 300, that is what we are looking at. So the earlier buys, one could have gotten buys here upon the break and retest here. Would have gotten earlier buys there. Earlier buys, you could have gotten them there. Right now, let's see what's happening. So this 1 hour candle, this one, it has to reject and close above for us to buy. If it's doing what it's doing like this, we are not going to buy now as yet. So it means we need to look for another level. Either we use our Fibonacci and look for that level where the market can still come back to. Right, this is my Fibonacci. Point A to point B. The first point A to point B was this one. Point A here, point B here. Came back for retracement, went all the way, right? Can you see? The first point A to point B was this level. This level there. So now we are looking at this scenario now. We're having this scenario, we have our 61.8 level here, which is a very significant area, a very significant zone. The market can come and bounce and respect there. Once it comes and bounces and respects there, we'll take our buy positions from that zone, 61.8. So market structure, we can actually see that it's actually uptrending. High highs, high lows, high highs, high lows, high highs. So according to the nature of market structure, if it comes and breaks this higher low, the market structure to me has shifted. It can most probably come all the way down before maybe shifting market structure again and going up. So according to the laws of market structure, crash 300, it has to crash on this higher low. It has to bounce, it has to buy on this higher low here. If it breaks this higher low, market structure has already shifted. We're now looking at other things now. We're now looking at different things now. So market structure, according to the laws of market structure, crash 300, it has to come and respect this higher low, bounce from the higher low, then we go. So there, once it respects there, we enter 61.8. We enter there. Once it respects there, we enter. Our stop loss below the zone. Our TP first target is always the 0%, which is 1:7 risk to reward, which is good. TP2 -27, according to the Fibonacci. TP3 -61.8, TP4 -100, somewhere around these areas here, which is 1:18 risk compared to reward, which is a good one. Then if everyone wants to hold longer, I've mentioned these areas here at the top there. I have those areas at the top. Top areas, or even the trend line there at the top. That is 1:50 risk compared to reward. If you risk $10, you make 500. If you risk 100, you make 5,000. So it's just now you playing around with risk compared to reward. This is 1:50. From here to the trend line there at the top, the risk compared to reward is 1:2. 1:50. As you can see, 1:50. If you risk $1, you make 50. If you risk 10, you make 500. Risk 100, you make 5,000. You risk 1,000, you make 50,000. Simple maths. So 61.8, let's look forward for an entry. Once we get our rejection there, we look forward for an entry. If it doesn't respect there, please wait for it. Let's wait for it. Let's wait for it. Wait for it to break. Wait for it to come either to these areas here. If it doesn't respect here, wait for it to come all the way to the downside. Once we get our rejection there, we enter our buys. Then we go, because it will be something like a double bottom, whereby you have left leg, right leg. Then the neckline will be this zone here, which is the 0%. So that will be something like a double bottom. So you buy here, break here, retest, you buy more here, then we go. That is what I'm looking at on crash 300. Let's look at boom 300. Boom 300 from the daily. This is the daily perspective. Pushed up, now we're pushing down. Pushing down, you can see that we're forming our lower highs, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. Uh, lower high, lower high, lower high, lower high, lower high, lower high. You can see that we are still forming our lower highs. But now as we are going down now, the momentum is sort of like depreciating. The momentum is sort of like depreciating, meaning most probably we can start to see some shifts in market structure. Somewhere around the zone where, so right now it's still downtrending. It's still downtrending. That is effect. Boom 300 is still downtrending. That is effect. You can see that we are coming day down. Coming down, we have our support here. Once the support is broken, one can actually enter their sales targeting this area here, which is something like a day or two of holding, day or 2 or 3 of holding. If ever you enter after the break of this support, one can actually enter, go down with it. So if ever that does not happen, if this daily candle closes above here, we can as well anticipate some bullish pressure, then maybe come and break structure. But so far, so long the structure has been followed, once that support is broken, we enter ourselves all the way to the downside. So looking at the 4 hour, our support is clear here at the bottom. It's very clear. This one now, this one is more tricky, right? So this one, it's not really tricky. It's just might confuse some other people there. So here it is, respected here, respected, broken. Hey, this area has been broken. So what we want now, to take sales here, the market must come, reject, close below, then we take ourselves all the way. All the way, all the way, all the way, all the way. So just to reject here. If it doesn't reject there, those are scenarios where you see the market pulling back to around the 50, 1.8, somewhere those areas. Around the 61.8, you can actually see that the market left an order block. Left an order block there. What is an order block? The last bullish candle before the market went down. The last bullish candle, which is this one. Last bullish candle before the market made this huge push to downside. It's what you call an order block. So this market, if it pulls back to this order block, one can actually take their sales based on that, which is also confluencing with our Fibonacci, which is the 61.8, somewhere around those areas. So inside this whole zone, even if it comes all the way to around the 78.6, one can actually still take their cells. So long we're in this block, you can take your cells from there. So long we're in that block, either here or here on 78.6, you can still take your cells. Best sell is there on 78.6. Your stop loss just above the block. TP target, you are looking at this zone of support on the daily. 1:9 from there to there, which is reasonable. Reasonable because when you look at it, when you enter based on the 1 hour, 30 minute, your stop loss will be much more smaller than the normal. Right, so boom 300, that is what we are looking at. The obvious scenarios, they don't usually happen. The obvious scenarios, if they happen, we'll simply make money out of them. But if they don't happen, we are also well prepared for the non-obvious scenarios. Here, the non-obvious scenarios is what I've just explained, whereby the market will break this support. Instead of rejecting and closing below here, it breaks above, comes inside, comes back all the way to the order block, then start selling from the order block, where many people, they don't even expect. Start selling, come back, reject, respect it, then boom, respect, boom, all the way to the target. So we are actually ready for the obvious and the non-obvious scenarios on boom 300. So either way, again, we are going to get ourselves on this level. If it rejects below here on the 61.8 or somehow close to the 78.6. These are the three entry points that I'm looking at. Here, or even here on the third point. Remember the third point too, it shows that the momentum to the downside is strong. The momentum to the downside is strong. So even if it does reject there, we'll simply take ourselves from there. So that is what I'm looking at on boom 300. That is my lookout for boom 300, either there or here or on the 61.8 or on the resistance there, which is, this one is too obvious. This one is too obvious. This one's too obvious. Too obvious, too easy. If it does respect, it's fine. That is too obvious for me. It's too obvious. If it does respect, it's okay. We'll simply take ourselves there. 78.6, 61.8 cells again, something like this. Something like this. So this one, 61.8 or 78.6, either one of those, whichever one is respected, will take trades on the one that is respected. Whichever is respected.